Hey everyone, it's Mike from Orderflows here, and welcome back to my channel. I'm glad you could join me for today's video, where I'll be talking about, the differences between aggressive sellers, aggressive buyers, and passive sellers. This is a topic that comes up quite often with traders that are newer to order flow that haven't quite grasped the concept of passive buyers and passive sellers and aggressive buyers, aggressive traders. So before I jump in, if you've been enjoying these videos, don't forget to subscribe to the channel and click the notification bell so you don't miss a new upload. And if you find today's video helpful, be sure to hit the like button and leave a comment sharing your biggest takeaway or question. I love hearing your feedback, and I like creating videos answering users or watchers' questions about order flow. Your support really does go a long way in helping me create more videos just like this. So if you're getting value from my channel, want to see more, be sure you subscribe. All right, so let's go ahead and get started with today's topic. All right, so today's topic, sort of came up from a comment from Preeta Mayadev 5649. And he says, hey, I have a doubt. Left ones are bids, so that number tells us how many aggressive sellers bought at that level. So in a downtrend sign, so it is a downtrend sign. So why does it rally up? Or am I missing something? It comes down to understanding that there's basically four types of traders in a market. Okay, you have passive buyers, passive sellers. Those are the limit orders. Then you have aggressive buyers and aggressive sellers. Those are basically the market orders or traders that are lifting the offer, buying the current offer, or selling into the current bid. Okay. And again, if you don't understand the difference, I'm going to explain it. But, for a trade to happen, a trader has to get aggressive. Okay, so first let's start with a dome. I think I have a dome in here somewhere. I think I stuck it behind here. This is just a basic, simple dome. Let me just make this chart a little bit smaller here, so it's a little bit easier to see. Let me just, I should have done this before I started the video, but anyway, let's just make it here so I could have everything on one side. All right, so hopefully you can see this dome here on the left-hand side. And this is the E-minis, okay? So you can see there's right in the middle is the last traded price. Then you have volume on the right-hand side and volume on the left-hand side. So there's volume on the right-hand side. This is the offers, right, that are currently on the current offer and the next best offer going up every tick, and there's volumes there. These sellers up here, these are passive sellers. These are limit orders. People that put a limit in the market, waiting for the market to come to them to execute their trade. On the bottom part of this price ladder, this dome, is the passive buyers. Okay, so you can see there's 73 at the price of it's hard to see, 45.28 3/4, 116 at 28 and a half, 125 at 28 and a quarter, and so on. These are the passive buyers. These are the passive sellers. Now, for a trade to happen, either someone has to come in at the market and sell at the bid, or they have to come in and buy at the offer. So an aggressive seller will sell into a passive buyer. Okay, think about that. Okay, think of it this way. You go to buy a house, all right? Keep it simple. We'll call it, say the house is $500,000, okay? And that's what it's listed at. That seller, the person trying to sell the house at $500,000 is the passive seller. But, nobody wants to pay list price, right? We all want to come in because we've all watched, House Hunters, and people will go look at 3 houses, go eat an ice cream, and put a bid in $50,000 below the current price and get it. But that's not the reality. Now, over the last few years, the housing market has been pretty strong. So there's a house that's for sale for $500,000, but there's 20 people that want to buy it. So what they do is they become more aggressive, and they're like, well, I know your house is offered at $500,000, but I'll pay you $550,000 for that house. That person that wants to buy the house is the aggressive buyer. They're not just, basically, in a sense, they're sweeping the market. They're sweeping the offer at $500,000 and buying it up at the next offer, $550,000. Okay. Now, if interest rates were at zero and the houses were plentiful, and it's a buyer's market, all right, then, a buyer would see the house listed for 500,000. Yeah, I like it, but you know what? I think 500,000 is a bit rich. I'll bid 465,000. So the current bid is at 465. The current offer is at 500,000. So if something's going to happen, either the buyer has to go up in price or the seller has to go down in price. Someone's going to have to get aggressive, because now you have a passive buyer at 465, you have a passive seller at 500. But maybe the seller's like, oh geez, I got to move because my job is requiring me to live someplace else, and I'm fine. I've made, I bought the house for 300,000. Now it's worth, 500, but I'm happy to sell it at 465. So he'll be the aggressive seller and go down and hit the bid at 465. So he's selling it to the passive buyer at 465. Okay. That's sort of how, the bid offer concept works. Okay. Now on a footprint chart, what I did here is I made the fonts much bigger. I hope you guys can see it, because I did get some comments saying it's, your resolution. Honestly, if you're watching this on a iPhone or smartphone, yeah, it's going to be a bit hard to see what you're looking at in the footprint. Okay, you'd have to make the video bigger, but I increased the font size substantially, so hopefully people can see it. So what we have here on a footprint chart, okay, so like let's just find this bar right here at 845. Okay, you can see volumes on the bid side, volumes on the offer side. Okay. This 195 right here is what traded when the market was 45.33.5 versus 45.33 3/4. 24 traded at 33 3/4. 195 traded at 33.5. Okay, that doesn't mean that there wasn't more up here at 33 3/4. There probably was, but that's all that traded there. Okay, so when it was in the two-way auction, 33.5 at 33 3/4, the aggressive sellers sold 195 into the bid at 33.5. The aggressive buyers only bought 24 at 33 3/4, 33.75. Okay, so even though you have volume on the bid side, that is the limit. Okay, at 33.5. And only 195 was sold into it. Okay, the 24 was all that was bought aggressively. Now, if you go one tick lower, 106 at 33 1/4 versus 236 at 33.5. 106 contracts were sold into this bid. 236 were bought from this offer. Okay, so there's, in this two-way auction, you have more aggressive buying than aggressive selling. Okay, now people will say, well, since you got more aggressive buying, shouldn't the market be going up? Okay, well, that's where the understanding the order flow comes in. Okay, market, this bar went down. So just because you have more that traded on the offer and less traded on the bid doesn't mean you have more aggressive buyers and the market should be going up. One, you have more passive sellers. So one, you have more supply in this market. And two, only 106 on the bid that traded, that was there to essentially support this market. And the market got through that. Okay, so there wasn't a strong bid there, even though more traded on the offer. So what you have essentially is a case of, there's probably more on the offer, so there's supply on the offer, right? Think of it back to the housing situation. When there's a lot of housing on the market, there's a lot of supply on the market. It doesn't, prices don't go up, right? Instead, prices tend to drop. Then you go down at the next level, 119 versus 121, 33 even versus 33 1/4. Okay, it's pretty evenly matched, but still, you had, what was that, 2 more contracts traded on the offer at 33 1/4 versus 33 even. People say, well, again, you got more aggressive buying here and here. Why isn't this market going up? Right? Because they're lifting the offer for more volume. Well, at the same time, you have more selling because it's not able to keep that momentum going up. There's still passive sellers there. Okay, because how do I know there's still probably more passive sellers here? Is because the market's going down. The bids are getting taken out. Okay, 28 versus 67. There's even less bidders here at 32 and spot 75. Okay, there's only 67 traded here. So I know this market's probably moving fast. You got an imbalance, 122 against 29. Okay, so now it's starting to see these bids get cleared out, and there's not a lot of aggressive buying. This is what a sign of supply looks like, sort of heavier volume coming in, a little bit less buying, a little bit less buying, and then the bids start getting taken out quite strong. 122, 161, 226, 653, 778. Actually, this is what we call an instance of order flow sequencing, right? On the order flows trader, I have it turned off, but let me turn it on here. It should show there, I believe. I set it 5. Again, this is the E-mini. Just give it a second here, right? Yeah, right here. This is what we call sequencing. So it's going down through more and more on the bid side. Okay, so when you see sequencing like that, you like to see supply coming into the market. Once that supply hits the market, you see the bids getting cleared out for more and more and more. So again, sort of getting back to that comment, let me just pull it back up here. This is where you're confusing, because you're saying aggressive sellers bought. Aggressive sellers never buy. Aggressive sellers sell to passive buyers. Okay, you can't mix up buying and selling. So left sides are bids. Yes, this is the bids. Aggressive sellers are selling into these bids. Aggressive sellers are not buying, they're selling. And yes, that would be a downward sign, because you say later, it's a downward sign. Why does it rally up? Okay, well, you're conflating aggressive selling with buying. There's aggressive buying, which would be buyers lifting the offer. So for example, let's find sort of a swing low here. Okay, so here's a swing low, right? You got your green candle. Down here, it's 350 against 67. It's 130 against 205. The passive buyers are here. 130 was passively bought from aggressive sellers. 350 was passively bought from aggressive sellers. 186 was bought from the passive sellers, or sorry, the aggressive sellers, which was passively bought from aggressive sellers. So aggressive sellers are selling into these bids here. Okay, that's what causes the market to go down, is aggressive sellers selling into the bids, which is the passive buyers. Once that aggressive selling is getting weaker, there's still passive bids here, right? We can still see in the book, right? There's bids at each level, right? So there's passive bids, below this level here. Okay, even if you were to look at, I don't know if I got a heat map on here. I don't know if this is it. Yeah, this is the heat map, right? The book map. So you can see in here, right? These are the passive bids and offers, right? These are the offers. These are the bids in the book. All right, let me get back to my footprint chart here. Okay, so what you have is aggressive sellers selling into passive bids. Okay, then you have aggressive buyers buying the passive offers, right? Buying it here. What's going to cause this market to go up on the dome, right, which will translate into the footprint, is people buying the 72 lots, people buying the 92 lots, people buying the 103 lots, people buying the 147, buying everything. And then the bids will start to fill in on the bid side as the market is going up, which is what you see on a footprint. Okay, so again, don't conflate aggressive sellers as buyers. They're not. Aggressive sellers are selling to passive buyers. Okay, that's the difference, right? So, even though you have, there's always going to be aggressive selling and aggressive buying in a bar, in a market that's going up, right? That's what a two-way auction is, right? It's not a one-way auction where price only goes up, right? Like you go to the auction houses, prices only go up. They don't start coming down. The only times they start to go down is at the beginning. If you guys ever been to like an auction, say, oh, we're gonna, I've been to these auctions at Keeneland in Kentucky for the racehorses. Oh, this is the son of Northern Dancer. blah, blah, blah. We're going to start the bidding out at $50,000. Nobody bids. Okay, well, he's such a great bloodline. We'll start out at 20,000. No bids. And then it gets down to, we're going to start out at $1,000. And then everyone's attracted to the market. Okay, so once, that's the only time the price goes down. But once people start bidding, price starts going up. But in a two-way auction, price could go up, price could go down. That's sort of the dynamic of a two-way auction versus a one-way auction, right? Like eBay, right? It's an auction site. Now it's everything's like buy now, but price all goes up because everyone's competing with each other to buy one item. Okay, what causes a market to go down, right? Like a futures contract is there's supply in the market coming in oftentimes. Okay, but basically understand there's basically four types of traders: there's passive buyers, passive sellers, aggressive buyers, aggressive sellers. Aggressive sellers sell to passive buyers. Aggressive buyers buy from aggressive buyers buy from passive sellers. Okay, and that's what causes the markets to go up and down. If the aggressive buyers overrun the passive sellers, then price will go up, just as price will go down, like here, right? If aggressive sellers are clearing out all the bids and hitting the next bid, just cleaning out all the bids in here, right? That's what will cause the market to go down. So again, I hope that clears that up for you. Don't conflate aggressive sellers as buying. They're not. It's completely different. Aggressive sellers sell to passive buyers, all right? But yes, the left ones is the bid side. The right one is the offer. All right, so that wraps up this video. I hope that clears it up. I hope you find, you guys, that these tips are helpful for your understanding of order flow. Let me know what you'd like me to discuss next by leaving a comment below. So again, if you enjoyed this video, make sure you hit the like button. And if you haven't already, subscribe to my channel so you don't miss any of my upcoming content, all right? So thanks again for being part of my order flow community, and I'll catch you guys on the next video. Bye-bye.